Wall Street and investors take a big sigh of relief after Microsoft reported their earnings after the bell, and not only that, gave updates on guidance, which quite frankly applies to a lot of companies that we watch here in the stock market, including Meta, Google, Amazon, and others. We'll go through Microsoft's Q4 and full year earnings on today's video. What is going on, investors? Hopefully you guys are doing well out there. Earnings season moving right along, and it's a big one. Today, we're going to talk about Microsoft Corporation. We'll get into their earnings. We'll take a look at their revenues, which came in at $51.87 billion. That was a 12% growth rate year over year. Did miss expectations by a little bit, by about $490 million. They also missed on that earnings per share side, but when you go through the press release, sometimes these headlines come on, and the algorithms and the short-term traders jump in based on the short-term headlines. When you dive into the earnings and you start realizing what happened with this company, well, all of a sudden, the investors started digesting the news, and this stock is popping in the after hours. Initially, it was down. Now it's popping up 5.5%, 4%, depending on what data you're looking at in the after hours. And then I waited until we got guidance from Microsoft. Don't always have to do this. I figured we probably should, since Q3 is a mystery. Q4 heading into next year. Are we in a recession? Are we not? Is gas going to 6 or is it going back to 3? Those are a lot of questions we're asking ourselves as investors over the next couple of quarters. Microsoft already has visibility into their upcoming quarter, and they gave us guidance. And when you add up $14.75 billion on the high end on productivity, and when you look at cloud business, you go to the high end, $16.65 billion expected there. And then finally, personal computing to $12.8 billion. You add all of this up and you get an earnings estimate from Microsoft in the upcoming quarter. Again, we'll talk about Q4 on today's show. We'll go through all the numbers. We'll go through all the financials, the revenue, the gross profits, the cash flows, everything that you need to know with Microsoft. We're talking about the upcoming quarter because, quite frankly, investors are always looking at least a quarter ahead, more than likely 2 or 3 quarters ahead. And we got confirmation in the after hours from Microsoft that the upcoming quarter is expected to at least meet, if not exceed, estimates that were already on the street for about 13% growth year over year. That is when this stock started to move higher. And then when you look at Google, Meta, Alphabet, all the companies out there, they started moving higher as well, because we're starting to see confirmation that yes, things are bad. When I say Microsoft is meeting their expectations for Q1, those are the expectations that have been dialed back and brought back. They were higher earlier this year before a lot of the interest rate hikes took its toll on the economy. Microsoft, referring in the after hours, things are not bad. CEO Satya Nadella got on the call and he says Microsoft will invest to take share and build amid economic uncertainty. If I could stand up and applaud right now, that's exactly what I would be doing. And if I was the CEO of Microsoft, which I clearly am not, I am just an average shareholder. I want my CEO, when people are talking about cutting costs, just surviving, just getting by during a recession, just trying to survive. Guess what you do when you have hundreds of billions of dollars? Well, you start to invest and you take market share, you obliterate competition, you squeeze their neck during economic uncertainty. Let the little boys worry about if they're actually going to eat at night while Satya Nadella is serving up Wagyu steak. This is exactly what you want as an investor. This is why we invest in gold medal winning stocks. Yes, during the last year, Microsoft's down 12.8%. Year to date, 24%. Look, you can't get the upside, you can't get the gains without giving a little bit back every once in a while. But guess what's happened to all of Microsoft's competition? They've been absolutely obliterated. And if we go into a deep recession, if we go into a prolonged period of time with higher interest rates, companies like Microsoft will thrive while a lot of others will start to flounder. Now, looking out a couple of more quarters down the road, mid-teens grower. We're seeing this across the board. Wall Street just said, well, we're going to dial back the earnings estimates for the next couple of quarters, and they've all put it to a mid-teens grower. You look at Google, you look at Meta, you look across the board, even to Amazon, you're looking at a mid-teens grower across the board on that revenue side. On that earnings side, expected to be under pressure right now, probably due a lot to the fact that you have the strength in the dollar and you have these multinational countries and companies that are under pressure. Whenever you have a dollar that is strong strong and you're collecting in other currencies like Microsoft is, like Google, like Amazon, like most of these companies are, well, your earnings are probably going to be coming under pressure in the shorter term. But what do we know about FX? Okay, it goes one way and then it goes the other way. Eventually, that'll be a tailwind. I'm not sure if that's guided into this EPS estimate, but the fact is the earnings growth rate, or the revenue, growth rate, not expected to really accelerate, but the earnings are. And so it could be a mix of kind of cutting cost. We certainly see that across the board inside tech, inside a lot of industries. You're seeing a shedding of cost that is helping increased earnings likely in future quarters, but probably FX headwinds and different kind of one-time things, which I'll walk through. There's several kind of quote unquote one-time things. We're looking at $1 billion worth of impacts in this quarter, not directly related to supply and demand and Microsoft's business. That is driving the stock in the after hours as well. When we come over here, it's one of the first thing I bring up with Microsoft. Okay, this is the first thing that I bring up. I come here, I look at LinkedIn, that's up 26%. Okay, not a lot of people talk about that. Your bread and butter Office 365 commercial up 15%. Your Office commercial products up nearly double digits to 9%. I usually scroll down to Azure. I don't usually, I always do. Look at this, 40% year over year growth. And then when you factor in constant currency, so if the currency was the same today as it was a year ago, okay, it's never like that. So I don't take much stock in these constant currencies. And again, it's a headwind now. In a year from now, the dollar will probably be weaker or something will happen, and it'll all of a sudden be a tailwind for these companies. But on a constant currency basis, you're looking at 46% growth over in Azure. Some of the more international quote unquote type products, you're seeing double digit growth over there as well. Xbox, that was down in the quarter. I think we understand that there was this whole huge pull forward in demand for video games as people were sitting around at home, not being able to go out, not being able to travel, maybe not even be able to go into work. So you saw a lot of demand for Xbox content. That's coming up against tough comps. We also see Windows OEM down as well. Also, a lot of pull forward in demand for that, but there were some China-related impacts that caused those two business segments, or primarily Windows OEM, to go down. Now, I talked about the guidance for the upcoming quarter. If you want, I have my links to my Twitter and my Instagram accounts in the description below. Love to see you on those platforms, have a discussion with you anytime there. Now, in terms of the one-time, we'll call it one time, it's probably a little bit longer than that, but I'll walk you through some of these unforeseen and things not related directly to Microsoft business. We had foreign exchange have a $595 million impact. Okay, this is what companies usually do in a full year, like revenue-wise. In fact, that's a pretty big company, quite frankly. Microsoft's just their foreign exchange rate impact was a nearly $600 million charge, or about 4 cents per share on that earnings side. You had those shutdowns in China in the most recent quarter that impacted Windows OEM revenue by $300 million. So $600 million plus $300 million, and you're at nearly $1 billion. You had some reductions in advertising spend. That was an impact of about $100 million. As somebody that relies on online ads for the bulk of my family being able to survive and eat, yes, I will tell you, ad rates are down significantly. I hope they come back. You have that ongoing conflict. We're praying for everybody in Ukraine and other countries out there that are impacted by this. You had $126 million related impact to that. And then finally, you have some restructuring at these companies. They're laying off some employees. They're restructuring the business. You have those employee severance costs. So whenever you see Microsoft or any of the companies that you're following, they cut employees. Well, they actually have to recognize some expenses in the next probably 1 to 2 quarters. Again, depends on how deep the cuts end up being, because they've got to pay those employees out. Sometimes there's stock options. Usually there's pretty generous severance, like they give them maybe a month's pay or something like that, maybe continue their health benefits until they find a new job. That's significant cost. So you don't actually get to recognize that employee not being there, or those group of employees not being there. You don't get to experience usually that reduction in cost for a couple of quarters. Moving over to the profit and loss statement over at Microsoft, far left-hand column is our most recent quarter. This is a 12-month period. This was fiscal year Q4. Most companies are in quote-unquote Q2. Microsoft recognized things a little bit differently. So when you see Q4 and then in their next earnings, they'll refer to that as fiscal year 2023, even though we're only in technically the third quarter of that calendar year. Now, hopefully I didn't confuse you. Most thing to recognize here is we have total revenues over at Microsoft at $51.8 billion. billion. Last year, you're at 46.1. And again, I talked about how the upcoming quarter, it looks like Microsoft guiding right in this range, okay, depending on how things turn out, likely with those other headwinds that they talk about with China shutdowns, with FX, and other types of things. But I don't want to just gloss over, for the last 12 months, we had nearly $200 billion worth of revenue. Folks, there's only 365 days in the year, and Microsoft earned nearly $200 billion worth of revenue. This is why you center your investments and your focus around these types of companies, because this is like a million companies combined into one. $200 billion of revenue in a year. Last year, you were about $30 billion lower at 168. Probably more impressively than that, we'll focus on the 3 months where we had $51.9 billion worth of revenue. Our cost on that, just $16.5 billion. We always have to wipe the drool off our microphone whenever we look at Microsoft. Certainly, there's other smaller examples of this, like you look at like an Adobe as well. These gross margins, so a $51.9 billion worth of revenue, you had just $16.4 billion worth of cost. So they label it here as gross margin. When I think of margin, it's usually a percentage. I usually think of this as gross profit. So you, off of $51.9 billion worth of revenue in a quarter, you had gross profit at $35.4 billion. This is why this company is constantly in a great position to do acquisitions and do all kinds of things, because that leaves you so much headroom for research and development, sales and marketing, and general administrative. You see in the most recent quarters, those ticked up essentially across the board. You went from about $5.7 billion on R&D, up about $1.1 billion, we'd call it, to about $6.8 billion, nearly $6.9 billion on that research and development. Selling and marketing up a little bit, not as much as research development, up from $5.8 to $6.3 billion on sales and marketing. Finally, you have general administrative expenses just relatively flat. I'm sure there's less travel and other just kind of burn outside the company. We saw this with Google as well, just marginally year over year from $1.5 billion up to just $1.75 billion on that general administrative side. So that gives us operating income in Q4 off of $51.9 billion. After you pay everybody's salary, you earned $20.5 billion. It's just absolutely unbelievable. That's not for the full year, folks. That is for 3 months. They had usually, if this was their revenue, I'd be excited. This is their operating income, $20.5 billion. You see it transfers out for 4 quarters since you had $83 billion, not revenue, not cost, $83 billion worth of operating income for Microsoft over the past 12 months. It's hard to look at these numbers and believe them, but trust me, they are real. When you pay some interest on your debt and then you pay income taxes as well, these corporates do pay income taxes. Believe it or not, they paid nearly $11 billion in the last year on income taxes. I'll let you to decide if $198 billion worth of revenue, $83 billion worth of operating income, the company paid $11 billion in taxes. I'll let you decide if that's enough or not. A lot of discussion in Washington on corporate taxes. I'll let you decide if that's a lot or not enough for Microsoft. So for the full year on the net income, this is after everything, you earned $72 billion. That is an impressive number all in its own, but the fact is you had $198 billion, and not quite half, but a lot of it flows all the way down after you pay everybody $72 billion. So when you see Microsoft cutting back, this is like Elon Musk, instead of having the $6 latte, takes one less pump out of it and it costs $5.50. It's not going to impact their day. Microsoft, very good from a financial perspective. When we look at it year over year, that's probably more tangible to the kind of economy that we're in now. Just up marginally year over year on that net income side, 16.5 to 16.7, but this will hold your stock at the level that it's at, and also get investors excited, because if this is the bad time, maybe it gets a little bit worse over at Microsoft. I'm talking about from a financial perspective. Maybe it gets with a recession and really like a really strong dollar. Maybe these get 10%, 20% worth, but take off 20% from all these numbers, and it's still probably a pretty darn good investment in the shorter term. And the longer term, you're looking at a wonderful, life-changing type investment. Current assets over at Microsoft started to whittle down over here. And if I could stand up and applaud for the CEO over at Microsoft, I would again. Because folks, we're sitting in an inflationary environment that is 9% year over year, or something like that. I mean, the CPI is unbelievable. And that's if you believe that number. It's probably like 15, 16, 20%, depending on what goods you're talking about. And certainly if you're talking about energy, way more than that. So what should you do in an inflationary environment? Should you have a bunch of cash in your bank account? No, you should run through it. And that's exactly what Microsoft has done over the past year. And they have a $69 billion deal that is pending regulatory approval for video game maker Activision Blizzard. Once that goes through, this cash balance, the only reason why they're carrying $104 billion is they have to write a check if it gets approved for another $70 billion. I love what Microsoft is doing. They're getting rid of all this cash. I am sick, and if you ask me, like the one thing that I'm sick and tired about with big tech, like Apple, like Microsoft, like Google, even with, to a certain degree, with Facebook, get rid of your cash. Why do you have $100 billion sitting on your balance sheet? It's stupid. And I love that Microsoft is being aggressive. And if that regulatory approval goes through, they'll be able to burn through even more of that cash. Now, we could argue that they overpaid for Activision. Look, we can go into that. But in an inflationary environment, sometimes overpaying for something, not necessarily that bad. Now, we have some long-term debt that's been whittled down a little bit, $47 billion. So this balance sheet, and again, I'm assuming that they're going to write a $70 billion check out of this cash balance when and if they acquire Activision Blizzard. I don't know if that's how that deal is going to be structured. Maybe they take on more debt. Maybe they issue shares of Microsoft, those types of things. I don't know how they're going to do it. I'm just assuming that they will. If and when they subtract $70 billion from this, it will turn this balance sheet upside down a little bit, but it doesn't have me concerned because we have flowed down here appropriately enough to cash flows. And you see why I'm not concerned for this company is you had net income in the most recent quarter. We walked all the way down to net income. We showed you year over year on a quarterly basis, up just fractionally, 16.5 to 16.7. I tell you what, any company that you're following, if they can get through the next 12 months with just fractional growth, quite frankly, it might be good for probably bullish for the stock and maybe even the stock market. Year over year, you're seeing much better because the comps are better for Microsoft in the previous quarters. But let's not get lost in that. Let's flow through all our add backs and our subtractions. And net cash from operations off of $16.7 billion worth of revenue, you had positive cash flows of $24 billion. Look at for the full 12 months. $89 billion. This is how you can offer $69 billion for a video game maker and overpay for that based on the timing of that deal and still not be that concerned because you're producing $89 billion worth of positive cash flow. Even if you were to subtract 10, 20, shoot, you could do 30% off this number if things get really bad heading into next year. Net income shrivels up, cash flows shrivel up to a certain degree. It's still a number that is astronomical and puts this company in a great position when and if things start to get better. Common stock repurchased in the most recent quarter, $8.7 billion. They paid another $4.6 billion to shareholders in the form of dividends. You see this company is doing, we're talking a massive amount of investment. Last year, they did $63 billion. This year, $26. Here's the acquisition of companies. Last year, $8.9. They accelerated. I think this is the Nuance Communication deal, along with all the other little small deals. So I think that Nuance Communication, I'm sorry, I get so much news flow in my head. I don't always remember these numbers off the top of my head, but that was like a $19 or $20 billion deal. So when you see all these smaller deals that Microsoft reports, understand the vast majority of this $20 billion in acquisitions in the most recent quarter. Again, this is money that they spent on acquisitions. Well, most of that was for one company. So obviously, when you have $89 billion worth of positive cash flow for the full year, you spend about $58 billion on financing and another $30 billion on those investing activities, including acquisitions. Well, your cash flows barely moved, okay? This is about $88 billion and some change, $89 billion, and they earned $89 billion. This is exact. When you have an inflationary environment, cash should come in like $89 billion, and you should cancel it out with different types of investments, rewarding shareholders, buying back your stock. That's exactly what Microsoft is doing. Whoever the CFO of Microsoft is, he's incredibly wealthy, but he or she is doing an unbelievable job. I love this is probably out of all the big tech companies, this company is doing the best managing these finances and being aggressive in the environment that we're at. This is the reason why I continue to buy Microsoft shares. Now, from a technical perspective, this isn't doing anything. If you're a fan of this channel, if this is the first video that you view of me or one of the few that you've seen, well, every Friday we do technical analysis on Microsoft, and you can tune into that video. I have timestamps. You can jump to just the Microsoft technical analysis if that's what you want. And you notice, look, over the past year, the stock has been just in this downward channel. Now, more specifically, I'm looking at just over the last couple of months. And what we're seeing with a lot of tech stocks is they're starting to flatten out a little bit. This one's probably a little bit lower. There's probably an area here, but the vast majority, we're talking about going back to May. So we're looking really over the last 90 days. I'm seeing this with Google. I'm seeing with Amazon. I'm seeing this with a number of different stocks, the mega caps that we're looking at. Yes, there's some price action up above. There's some price action below, but over the last 90 days, for the vast majority of the time with Microsoft, you're down here about 250 and your upside's about 270 until you break out of that sideways consolidation. Well, there's nothing really to report here with Microsoft. On the upside, you're looking for a break, quite frankly, above the area where it's at. It's not that much farther. That's why we're going to be watching Microsoft pretty close. You're looking for a break up, and from a dollar perspective, it's a pretty good move. You'd have to get up 270, 280 before I would say you're technically doing something a little bit different from this uptrend. And look, if Microsoft gets up here to 270, 280, don't be alarmed. It will be overbought in the shorter term from that perspective. There'll be pullbacks. I think you buy those pullbacks. More in the shorter term, I don't anticipate these stocks rallying another 10, 15%. It's possible, okay? It might. I'm not going to sit here and say, like, I know exactly what's going to happen, but we're sitting up here about 264. What has happened every time Microsoft's gotten to the top of this green bar right here? In fact, 100% of the time since November, anytime Microsoft, and again, we're talking about this green bar right here, anytime it's gotten to the top of the bar, yes, occasionally it's busted up over and above it, but it has signaled a time to either sell or wait to buy Microsoft. Where we're at with Microsoft at 263, this is where you either sell your shares if you want to do that and realize capital gains. If you have gains in the stock, I don't care what you do. Everybody's situation is a little bit different. This is personally where I'd think about starting to sell. I think you hit a trailing stop here. If it does continue to rally in the coming days, even better opportunities to sell, because again, 100% of the time since November, this has been an area to sell. It's either gone up a little bit and then crashed all the way down, or it's immediately reversed near this green trend line. So I am not Miss Cleo. I don't have a crystal ball, but I know the probability since November is 100% of the time you sell Microsoft. And if you do sell it, there should be some area of support. More realistically, very close underneath. Again, very shorter term, we made some lows back here in June. We made some other sets of lows in July. More recently, the stock today pulled back here to another higher set of lows. So in the shorter term, things are looking glorious with Microsoft. This is why I'm watching this area very closely. We're starting to go out sideways, and the shorter term trend is up. If we continue to bounce, then we should start some kind of a shorter term uptrend in a lot of these stocks, including Microsoft. That's why when I say you should sell, or from a technical perspective, you should sell, that's based on the last 6 to 8 months of technicals that this stock has built up. At some point, this is going to change, and that's what should get you excited as an investor. If it doesn't change, you should get rejected in this area and pull back south of about 240 on these shares, maybe even exactly near 240, retest these lows. You get a pullback like that, those are buying opportunities, because for the most part, you'd still be in this sideways consolidation. If Microsoft maintains this sideways consolidation, which is supported a little bit by earnings estimates and the fact that we have positive guidance coming from Microsoft, this looks good. I hope I don't confuse you from a technical perspective. I am just telling you what this chart is saying. It's telling you in the shorter term, you probably should sell, but it's also saying that there's the potential for the reversal at these areas as well. So you better believe I ain't selling a dime of my Microsoft shares. In fact, if we see weakness in the markets, wouldn't surprise me, but if we see a pullback in stocks, a little bit of overbought conditions that have materialized, you get a pullback again down to the bottom either of this uptrend or more specifically down here about $245 per share. Snap by a little bit of Microsoft at that area. Hopefully you guys enjoyed today's video. Obviously, we'll be back with more this week. Good luck with your investments.